Good afternoon, everybody. Okay, so I'll wait for them to get my slides up. And quick confession, I've done this a lot, but this is still terrifying. I don't know why. I don't know why. Every time I come up here, I get a bit nervous. I get a bit nervous about how I'm going to start. Yeah, hold it on that slide there for me for a sec. So, oh, you know what? I know why I'm particularly nervous because you guys live stream this. And I got this great idea. I said I'd send a link to my wife because she's able to make it. And then I said, hey, why don't you send it to my mom as well? So now my mom is watching, I think, which really raises the tension level. I'm not worried about you guys. I'm not worried about you guys. But my mother's in Trinidad, and I think she's watching. So, all right. Okay. So, my name, my name is Kwesi Raphael. And let me disabuse you of a notion here. I am not Ghanaian. Okay? I was born on a very beautiful Sunday in an October few years ago. That's why I like October. And I was called Kwesi because my mom found the name in a book. Yes. All the way over in Trinidad, we had a book, and that book said Kwesi means born on Sunday. She said he was born on Sunday. We'll call him Kwesi. I didn't know any other Kwesis growing up. As a matter of fact, I'm pretty sure I mispronounced that name for the first 12 years of my life. It was only when I was 12, we were in London, and we were going to a church with a lot of Nigerians in it. And these two girls said, you say your name wrong. And I said, it's my name. How I say it is how it is. They said, no. It's supposed to say Kwesi. I said, no, my name is Kwesi because I'm from Trinidad, and that's how we talk there. She said, no, it's Kwesi. It was only when I was in my 20s, I was up in Scotland, and my church there had a couple of Ghanaians in it. And, it was an Isaac and a George and a something else, but they were all Kwesi. So when their wives spoke about I kept turning like, who's calling me? I didn't realize it was as popular, but then it's one of 7, right? So it had to be that popular. It just never occurred to me. Anyway, that's me. This is who I am. So I am low-key believing for a miracle today. It was a miracle I'm believing for. Bishop told me I have 40 minutes. That would be a miracle. All right. Now, I love this subject. I love this subject. I could talk about this all day. I want to give you a little bit more about me because everything I talk to you about right now, moving forward about money, is not theoretical. All right? When I was 32, I learned that airbags work, seat belts work, and what glass looks like when it shatters at high velocity. You know what the jaws of life are? That's what the fire department go when they have to cut open a vehicle. So when they cut me out of the van at 32, and you think it's 32, that was like yesterday, right? No, it was a little while ago. When they cut me out of the van at 32, first of all, I'd already gone through the is this it moment, me and, I'm in a van and there's a lorry and the distance is closing at a rapid rate and them brakes and not stopping fast enough. I'm thinking, am I done? But then I realized that that's what airbags do. Okay. Don't ever want to see that again. Seatbelts work. Okay. Don't ever want to test that again. But will my legs work again? Because when I got into that van, I thought, not much room here. Foreshadowing. Any of you who in film, that's foreshadowing. I'm like, not much room here when I sat in the van. And then when the van crushed, I'm like, even less room now. But as you can see, I can walk just fine. I did go through a long period of wondering, will that happen? Will that happen? But then it did. And then when I was 35, so only 3 years later, I'm sitting in one of those family rooms in a hospital where they sort of explain a situation to you, and the surgeons are getting me ready for the fact that 35, I might have to use the title of widower for a moment. So we're having that conversation at King's College Hospital, and I'm thinking, is this it? Is this how things move forward? So when I come to you, and you're wondering, what has this got to do with money? It has everything to do with money. It has everything to do with how you understand and what you do. And understand, I said 32 and 35. I did not say 55, 65, or what. So I'm really pleased to see that there's a lot of young people sitting here because this applies to you. This isn't for later. Well, maybe later as in later today, but not later as in 10, 15 years, if you follow me. Okay? So what I'm going to talk about is money. Perhaps we learned it wrong. Perhaps we weren't taught correctly. And I like that we're doing this still in October because this is recognized as Black History Month, right? Which means that we're all, I don't know how many months you had. I think I'm about 2. No, maybe I'm about 3 if we just count these months because apparently my history only happens in October. No, I'm kidding. If we can go to the next slide, please. So I'm going to talk about money, and there's no way that I can cover everything. So what I'm going to do is I want to make an ebook available to everybody. It is this one here called Your Journey to Financial Freedom. Does financial freedom sound okay to people? Is that something? All right, okay. Now, Bishop, Reverend, I did promise you a paper copy. This one's yours. You guys get an ebook, all right? Oh, click on the links. Let me see what's inside of it, because we're going to cover quite a few things. I cannot cover everything that's in this book. The book has a lot more. I want to make it available to you. My phone number is on the bottom there. My email address is on the bottom of every slide. But I will sort of take details afterwards. I'm open to speaking to people and just saying, how can we connect? How can we follow up? Okay? Next slide, please. Now, does this look familiar to anybody? Anybody seen something like this before? Yeah? Particularly this one, Billy. Billy is like, I have built so many Billies. All right? Now, I want to ask you guys a question. When you build a Billy, have you ever done it without the instructions? You did? How did it go? It went bad, right? You end up with so many pieces afterwards. You wonder, what on earth are these for? But you know, the thing is, it's typically okay with IKEA furniture unless you had to use a hammer. You could take it apart and put it back together the right way. I built so many of these Billies that I thought at the point that, I don't need the instructions. Yeah, I do need instructions. I do need the instructions. That's what they're there for. So my question to you is, what if money had rules? What if money had rules that you were not aware about? You see, just because you don't know the rules exist doesn't mean that they're not applying to you. Does that make sense? I always like to share this story. In my family, we play Monopoly a lot. I would say we play competitive Monopoly. Monopoly where people actually go bankrupt and it ends in tears, but that means that somebody won. You know what I'm saying? All right, like Monopoly is like a contact sport. Now, I remember when we were introducing my nephew to Monopoly, right? And I wanted to teach him how we played Monopoly. And we were playing, and he was into it. He was playing hard, but he could not beat Uncle Kwesi. I ended up with all of the property. He was mortgaged and remortgaged and in debt. And because, he wanted the red one. So I said, I'll give you the red one, but you got to give me this much money, and I'll count it out for you. And you got to promise me rent-free for a few rounds, right? Hey, listen, the rules in Monopoly allow you to develop your rules. It's trade. I can say what as long as we agree, it's in the rules. It's legit. Okay, yeah, he was 6, all right? He was 6. But don't hate me, don't hate me. I want you to understand something. If I know the rules and you don't, I don't have a responsibility to teach you the rules because we are playing the game together. You get me? So if I beat you because you don't know, it's on you. Now, let's pretend we're talking about money. Let's pretend that conversation was about real money, not Monopoly money. If we can go to the next slide, please. Because, you see, I want you to understand what the dangers are of not understanding the rules of money. I got 4 points for you. First point, please. You give up agency. Now, we say agency is our control. That's what we have. Our ability to act. You give it up. It's like sitting down in front of a video game console, and some of you thinking, what, video game console? Go back to the Atari 2600 if you need to. Back in the day when you had a video game console, you had a controller, and that controller was not plugged in. Now, hands up if you've ever done that to somebody. You're playing them, and you just unplug their controller so you can beat them fast. I see the guys at the back. You guys have done that. I knew somebody did it. When you don't understand the rules, you're trying to play, and you ain't plugged in. You're not on that same system. We're not. It's fine. I'm not afraid of you. Your controller's not going anywhere. Point number two. When you don't understand the rules of money, that one happens. You will be at the mercy of the person who does. Just like my nephew and myself playing Monopoly. I do not feel ashamed of that. You guys would do exactly the same thing. I was teaching him a valuable lesson that he needed to learn the rules to go into life. Now, I probably need to go teach him that lesson again later on today because I don't know if he's remembered it. But I hope you guys are taking from it. Number 3, please. You lose. Simple. Now, the interesting thing is this is not like IKEA furniture where you can unbuild it and rebuild it. It's not like Mario where you just use an extra heart or you go find one somewhere along the way. It actually has longer lasting consequences. Last one, please. You see, money has a thing, let's call it generational lag. Where did you learn about money? I'm guessing it was at home. And where did your parents learn about money? I'm also guessing it was at home. So do you realize how long do you think, how many generations do you think it takes before we discover the error? How many generations does it need for the error to become really big? You see, some things that we have done or that have been done around us have left us locked out of the system, access denied. I love the bit at the beginning here where Bishop shared some good news. You know, when I hold team meetings, we start with good news. They know when you're coming on, you got to give me good news. We start with good news. And there was a good news of somebody getting a mortgage. That was great, right? How many people in here have a mortgage? All right, we got a few. How many of you guys want a mortgage? How many people want a mortgage? Can't see any hands. Okay, I see more hands. Can I suggest that there is a slight upgrade to having a mortgage? Have a house. You understand there's a difference. You see, the mortgage is a document that says that the bank has a right to your house. They are in your living room or your bedroom. They are. You stop paying, and they will be right there, and you will be somewhere else, right? Make it the goal to have a house. What if, Bishop, one Sunday, the good news was about who paid off their mortgage? Who got rid of the bank in their house? Do you see where we're going? So what I'm saying, and hey, don't get me wrong. There's nothing wrong with a mortgage. That's not the end. That is not the end. And if in our mind it is the end, we have a big problem that can only propagate. Okay? All right, I'm going to try not to get off course. So in light of this being Black History Month, I wanted to put into reality some of the things that I've just said to you there. So if we can go to the next slides. So the next few slides are actually just, I took this from the news on the 6th of October. So this is still this month. And if you guys have been paying attention to the news with the up and down of UK finance, it's probably not as good as what I'm showing you right now. This is from the 6th of October. So much has happened financially since the 6th of October. But if you check that out, Black and minority ethnic people, which would be us, are 2.2 times more likely to be in deep poverty. Deep poverty is defined as having an income that is 50% below the poverty line. So it's not poverty, it's deep poverty. Are you following me? Now, I might be talking to a bunch of people who are okay. You might not be this. And for that, we praise God. But that is not enough. We, as a people, were called to love, right, family? Is that right? Yeah? So who are we meant to love? Because who is our neighbor? Is that big question that they asked, and they thought it was really, really deep, and Jesus answered it in a very, very simple fashion when he talked about the parable of the Samaritan, right? So your neighbor really is everybody that's outside of your skin. We should care about this. Next slide, please. I'm going further on this same thing. Because Black and minority ethnic make up 15% of the population in the UK. Yet 26% of the people in deep poverty are us. And I will say us. 26% of deep poverty is Black and minority ethnic people. Next slide, please. Okay. So obviously this is not unknown, and there have been steps to close that gap. But if you're reading there, you will see that that stalled back in 2007, 2008, the last financial crash we had. You know, the big mortgage crash we had? The efforts to close the gap stopped. Ain't that something? See that's a saddening right there. That makes me sad. That bothers me. Everybody struggled. It's hit everybody. White people who depend on the system are 450 pounds worse off than they were 10 years ago. Black families are 1,600 pounds worse off than they were 10 years ago. You understand what I'm saying when I say we have to understand how money works. We have to understand how these things work because they have actual consequences. Actual consequences. And again, you might all be fine. But who do your kids interact with? Who are they going to work with? Will they have had access to what I'm telling you right now? No, not necessarily. Because there's nothing that I've said so far that you shouldn't have heard in school when you had to be there, like mandatorily had to be there. There's nothing I'm about to say. There's nothing I can say that you shouldn't have heard there. But you didn't hear it there. Unless you studied some sort of business or finance, and then even then, I would still wager that you hadn't heard it. Next slide for me, please. So, where are we going here? I just want to take a little moment because I'm not some solo entity. I am actually an executive vice president with this company called Genistar. And our focus, even though we are in financial services, our focus is educating people. And I made it my focus to educate people, particularly those who look like me, for the simple reason that nobody else seems to be doing it. You see, we believe that when people have better information, they make better decisions. Does that sound controversial? See, because I haven't met somebody who's doing poorly financially on purpose. I've been doing this for 13 years. I have not met somebody who's doing poorly financially on purpose. They're doing it because that's what they know. It is the best thing. Let me show you something. Next slide, please. Most people are sold financial services. They are. Click me forward again. So you got a family and they have questions and they have needs. They go to the bank. Click me forward again. And the bank says, here's what you need. So all of a sudden they leave with products. Now, let me ask you a simple question. Did they buy it or were they sold it? Do you realize that this is a question of agency? If I don't understand, I am acting without agency. I'm being pushed. I didn't make a decision. One was practically made for me. Now, I might feel like it's my decision because I put my hand in my pocket and I paid for it, but if I didn't properly understand it, without agency. So click me forward again. Here's what we believe, and I'm going to try and cover a few points today. We believe that people should have the education. We want to teach them things. We want to teach them some principles. So if you look there, you don't know how well you can see, things like the Rule of 72. I will cover that later. The debt trap, how to build your financial house, how to pay off your mortgage faster. That's a really popular one. Because you just think about it. I can live in a house and I don't have to pay somebody every month because it's my house, all of it. All the value that's growing up in this property belongs to me and my family. Guys, property is one of the ways that wealth is transferred through generations. You understand this, right? But only if you own it. You want to know what another way of wealth is transferred through generations? It's perhaps the number one way wealth is transferred through generations. It's not on there. Life insurance. Life insurance is one of the number one ways that wealth is transferred through generations. And I have found the most resistance to life insurance in our community. Why? We don't understand it. We don't understand it. So hopefully today I will tell you a few things that will help you get a better handle of this. But we believe that after people have education, they need a plan. Because when you know, now you need a strategy that applies to you. Next one, please. So here's the ideal scenario, right? For a family to actually buy products, they have to be educated, have a plan, and then engage with it. You don't engage and then learn about it. I know that's how most of us deal with stuff. We buy things, we get started, and then we read the instructions to work out what went wrong, right? Yeah, that's really dangerous with money. It can lead to long-term consequences. So, let's get started. Next one. I want to talk about the rule of 72. So, hands up, honestly, who's heard of the rule of 72 before? Do not click me forward. Just stop right here. All right? Yes, I know. I told you. We have one in the back. Anybody else? Is that a yes? Or were you just stretching? All right. Okay. Again, I have asked that same question. Who's heard of the rule of 72 before? For 13 years. I have enough hands to count the number of times people have said yes. Not that many times. But what I'm about to explain to you here is a mathematical principle that has been in existence for over 400 years. Actually, it's a mathematical principle. It's always existed. It has been known about for over 400 years. And it applies to your money. My money and your money. It's existed and been known about for over 400 years, and you haven't heard about it before. Isn't that a little concerning? Just that little fact there. Isn't that a little concerning? See, I was in a seminar yesterday with an investment advisor, and he pulled up the rule of 72, and of course, all of us knew the rule of 72 because we were working in a company and we were teaching it to other people. But a guy started with the rule of 72 because that is how you get to talk about investing. But we don't know basic rules. So let me explain what this is. This is a compounding interest rule that will teach you how long it'll take money to double at a given interest rate. You following me? Yeah? Okay, so let's say, and don't click me forward yet, and this one is, I'm going to count on my team up there to move slowly because there's a surprise reveal at the end of this one. All right, so if you take the interest rate and you divide it into the number 72, the resulting number is the number of years it'll take your money to double. So let's say you go down to the bank and the bank says, we'll give you 1% on your savings. Now some of you thinking, I don't even get 1% of savings in my bank right now. I get like, is it 0.25 or something like that? Let's say you got 1%. You take 1, divide that into the number 72, and what you get? This is an easy question. What do you get? Who said 72? I didn't ask you a hard question yet. 72. Yeah, 1 divided into 72 is 72. That means that it will take 72 years for your 100 pounds to become 200 pounds. Anybody excited? That's how the rule works. That's it. That's it in a nutshell. So let me explain how. I'm going to use an example of 3%, 6%, and 12%. So if you click me forward once, let's say you had 10,000 pounds, you put it away at 3%. Now you understand the rule. You say 3 into 72 is 24. I heard 24. Click me forward. So in 24 years, your 10,000 pounds will become 20,000 pounds. Now, if you're waiting for that to grow into a deposit amount, you might be getting worried. But if in another 24 years, this is exciting, in another 24 years, click forward for me, you will have 40,000 pounds. Now, you only waited nearly half a century. Okay, you're starting to see the problem. Now, if we double from 3% to 6%, a lot of people think we should double the return on the bottom, except it doesn't work like that. Because you see, at 6%, 6 goes into 72 12 times. Click me forward. That means now your money is doubling every 12 years. So, click forward again. By the time we get to 48 years, you see that the figure is quadrupled. Or as somebody once said to me, it's fourfold, right? But, and I'm not that familiar with house prices in Harlow, but somebody tell me here, can you buy a house for 160,000 pounds in Harlow? Oh, not here either? Oh, but you waited nearly 50 years. Okay, now if we double it from 6 to 12, right? Now we know that 12 goes into 72 6 times. So this is going to double every 6 years. Click me forward. All right, now one more time, click me one more time. By the time we get to 24 years, you already have 160,000. It's doubled, it's doubled, it's doubled. I want you guys to try and picture how much money you would have at 12% at the end of 48 years. All right, so I want you to put that number in your head. Do your quick math if you want. Now you're wishing you paid more attention in school, right? Now you're thinking, oh, damn it, I didn't know. It was a Sunday morning. I didn't think I was going to have to do this. All right. Okay, click forward for me. How many of you got 2.56 million? Anybody? This is church, don't lie. All right. Guys, here is why this is important. I just gave you a bunch of numbers, but here's why it's important. Most of us are saving on the left-hand side. 1% and below. Now, maybe if you have a really nice account, you might get 3%. There are a few accounts that give you 3% with very strict rules. Can't take any money out, will only do it for 1 year. Which means that from year 2, you're back to normal rates. But at least for 1 year, you can get 3%. Now, you know you needed 24 for it to double, but it's better than 0.5%, right? But where are we borrowing? We're borrowing far on the right-hand side. You see, I don't know when's the last time you saw a credit card at 12%, but I'm looking at them all the time, and they're 25, 29, 35, 39, 45%. I shudder to think what's going to happen now that the Bank of England is raising their base rate. All of those things are going to go higher. What does that mean, though? What does it mean? What does it mean to you? I tell you what happened the first time I saw this. True story, true story. First time I saw this, I went home and I picked up the Argos catalog because I love the Argos catalog. Right? The Argos catalog made loads of things affordable to me because I could pay a little bit every month for 2 years. I could get it. I picked up the Argos catalog after I learned the rule of 72, and I scrolled down and I looked in the fine print, and it said, interest is 29.9% APR. I just about dropped that catalog like it was on fire. I swear, honestly, I told my wife about this story a couple years ago. I couldn't shop in Argos for a decade. I felt like I was cheated. And then I realized it wasn't just Argos. It was everybody. So then I realized it wasn't them. It was me. I just didn't know. But you understand what it is I'm telling you? Because if I pay over 2 years at 29.9% APR, where that means it doubles every 2.3 years, I have paid twice for something that is already broken by the time I'm done paying for it. And just like me playing Monopoly with my nephew, they're laughing, thinking, I don't have to explain this to you. That's not the rules. We're playing. You started playing with me. Do you see what's going on here? So, understanding this rule gives you power in 2 areas. 2. 1, you start thinking, when I'm putting my money away, I want to look for the best way that it can go. Now, I know some of you are thinking, well, where do I get 12%, Kwesi? Wrong question. Wrong question. You want to start looking for that. Now, I can tell you where to go, but that's not the first question. How do I get there? That's what your mind's got to be on. Because you want to be thinking, what age am I now? How old am I? When do I want this money? How many times can I make this money double? Can you see why I said that this is something that the younger people really ought to pay attention to? Because you have more doubling periods than the rest of us. Okay? I have less doubling periods this year than I did last year. And you have way more than me. So, the other thing you got to think about is how quickly is my debt about to double? You want to pay it off before the debt doubles. Because when it starts to double, now you're facing 2 monsters, not 1. Are you seeing what I'm saying? See, one of the best stories and best feedbacks I had from just this little piece was when I went to see a young couple, and I did the presentation, and we did a fact find because we're going to do a financial plan. I come back the next week, 7 days later, and I start normal way, has anything changed? And he just about jumps out of his seat and says, yes. I said, what? I've heard everything, by the way. We're pregnant, we're moving country, all kind of things can change in a week. He said, remember when we did the rule of 72? I said, yes. Remember I had a credit card at 18%? I said, yes. Well, said when I worked it out that 18% was going to double every 4 years, so I did a balance transfer to 6% because now that's going to double every 12 years. He got it. He gave his family 8 extra years before it doubled so that he could put a plan in place to clear it all out. Can you understand the impact that can have? A little bit of knowledge. You just have to understand how this rule works. All right, let me give you another one. Next slide, please. This is a harder one because I'm going to talk about how to be properly protected. So we're going to use John and Mary here, our fictional family. The other day I did this for a couple and I said, yeah, a fictional family, John and Mary. She says, well, my name's Mary and my husband's name's John. I'm like, no, this is not you. This is not you. All right, this is a different John and Mary. I like to have fun. We'll laugh, and this is great because I believe that we remember things when we're in this state. This is not a funny slide. It's not. And I can pepper this with a host of real stories, and I'm sure you can too. Because this is a normal family. Call them whatever you want. They're both working, they got kids, but they got bills. So the money coming in sort of equals the money going out because that's how we live. They are managing and they're doing well. You can see that their income, they ain't really struggling. They're there. But then what happens? Click forward once, please. One day, John passes away. John doesn't only go, but John takes John's income. Now look at this here with me. Tell me what gets cheaper. Nothing gets cheaper. As a matter of fact, life gets more expensive. Now, in the event that we happen to sit down with them or these guys got a plan put in place and put a structure in place to protect their family despite whatever happened, Mary would get to do what? She'd get to cry once because she missed her husband. This would be the ideal scenario because guess what? We will all die. We will all die at some point, right? And age isn't really a factor in it. You know, I hear people say, oh, it's be fine. I'm a safe driver. Yeah, but what about everybody else on the road? Have you noticed that there are other people on the road and their decisions impact you, whether or not you make it home to your family? It doesn't have to be you. You could do everything right and still be with God long before your family. Do you understand that? Now, I'm not trying to throw a downer, but I'm trying to say, let us prepare for something that we know can happen. Because when this conversation isn't had or people do not take steps, click me forward once. We now have stress. We're working on how do we reduce the bills. Maybe we go and do some crowdfunding, right? GoFundMe. Have you guys ever got that text saying so-and-so has passed away? Can we get together to help the family or fund the burial or help with the mortgage? Because, of course, the next thing is, do we have to downsize? Maybe Mary and the kids have to sell the house because they can't afford the mortgage. Click me forward a couple times. Whatever is going to result in a lot of stress. Are you with me? You understand that? Yeah? Let me share a story with you. Two of them, actually. Two. And I want you to get this. I really want you to get this. Remember I said life insurance is one of the number one ways that wealth is transferred across generations. Because what we do not understand is life insurance is effectively buying money. Let me rephrase it. It's renting money. Now, if you are renting money and another company is saying, I will give you this money in these circumstances, are you going to rent a little bit or are you going to rent a lot of it? Knowing that the money is going to your family, would you rent a little or would you rent a lot? But you would rent something. All right? Because you understand that the mortgage is not the end, the house is. So you would at least make sure that the house was covered. But you realize that the people that you leave behind are going to require money, so you would rent enough for them too. I heard, I was speaking to the guy. I have to say, my wife keeps telling me I have a poker face and I don't show, and it had to because I wanted to cry with what this guy was telling me, and I realized that I needed to not in this conversation. We were having this conversation. I was talking about it. I was helping him sort things out for him and his kids. And it turns out he had life insurance. Okay, tell me more. In order to save money, dealing with the budget, his wife canceled the life insurance. 2 weeks later, she passed away. The daughter was born as an emergency C-section, never saw her mom. It was during COVID, 2020. So they did the whole crowdfunding thing, and loads of people gave money. And you know how those things work, right? You can all see how much they've raised to their goal. And then what happened? They surpassed the goal. But then everybody thought, oh, well, they have enough money, so they didn't need mine. So they just pulled back on their promise. It is 2.5 years since that lady died, and he has not had any money from the GoFundMe campaign because it was pulled out. Everybody thought it was fine. He doesn't need my money now. Now, that's nothing on the community. And to be totally honest, I wouldn't even say it's anything on the wife for canceling the policy because she was doing the best she thought for her family, right? Again, remember what I said. People do not get into financial difficulty on purpose. They do it because they're there because they're doing something that they thought was right. But the game has already started. You cannot reset. You can't just quit and start over. The game is being played. Well, we'll find out what happens to the family later on because we're working with the dad right now to teach him principles moving forward. He's got 2 young kids. I've met the son via Zoom, and we've played around and messed around on Zoom. Zoom is great for that with kids. We'll see where that goes. I told you I'd tell you 2 stories. Here's the other one. This is one a colleague of mine was sharing with me on Thursday. She said she went into this meeting and to talk to these people about life insurance, and there were 25 people around the table. And I was blown away by this story, right? And she said, okay. And the guy said, hang on. Before you begin, I want to tell you how we do life insurance here. Now, she's the one who's the agent helping them with their life insurance. He said, let me tell you how we believe life insurance. And by we, he meant his family, and they were all Indian. Here's what he said. He said, we will take the insurance because we believe that it's necessary, but we will put $1 million, they were over in the U.S., we'll put $1 million on the oldest member of our family. Because everybody dies, right? And when that member passes away, we will take half and we will buy a few businesses in their name. We'll buy another Subway. We'll buy another 7-Eleven. We'll buy a few businesses in their name with half. And what we'll also do is we'll get some visas to bring our family over, because to get a visa, you just need money, right? You need money and a job. But we have the job, and we got the money, so we'll buy some visas and bring our family over, and now they can start working in it because of what happened, what was sort of the sacrifice of this family member who went before us. All of us will pay for that policy. The 25 people on the table, all of us will pay for that policy because we believe that this is important. The other $500,000 will split with us, and then we will take out another policy, on another $1 million policy on the next oldest member of our family. Tell me, did they understand how to use life insurance to create generational wealth? What if when you were no longer here, your family could buy 2 or 3 properties? What if they could buy 2 or 3 properties to then fund whatever vision you had? Make sure that everybody got through, was able to graduate without student loan. What if they were able to do that? Because I'll tell you else. You know who else doesn't own any property? But they're really, really wealthy? Have you heard of the royal family? You think they got a mortgage? I mean, they got a castle waiting for them when they're old enough to move out, right? How did that happen? Somebody understood generational wealth. I'm just saying, we ought to understand this. Let me show you something else. Pastor, how am I doing for time? I stopped looking at the clock. You see, I knew it. Am I good for a couple more slides? All right, okay, cool. I'm going to wrap this one up quick. Here's another one. Go for the next slide for me. I want to talk about the high cost of waiting, because this is a retirement slide, but this is for young people. And I'm sorry if you don't feel young anymore, because I'm showing you here what happens if you start putting away £100 a month at 7% from age 25. Can you see that there? Just hold for me a second. So if you put away $100 a month at age 25, by the time you get to 65, you have £264,000 set aside. That's £100 a month. What did I spend £100 on when I was 25? I'll tell you what. I'll tell you this for nothing. It's already broken and gone, and I can't even remember. Or I've eaten it. I can't even remember. I can't even tell you if it tasted good. £100 a month. Now, for many people, 25, you're still at home, so you don't have rent, light bill, or council tax, or any of those type of things. So what else are you using your money for? Now, if you waited 1 year, let's say you didn't start at 25, you put it off 1 year, and you started at 26, you now have £245,000. Now remember, 100 pounds a month is 1,200 a year, but you can see with basic math that that is a bigger gap than 1,200 pounds. If you waited 5 years and started at 30, because you said, I'm going to get serious at 30, you will have 181,000 pounds. Click forward for me, please, because I want to show you the comparisons. If you decided to wait until you were 40, because that's when life really starts, right? That's when you got the family and you're responsible now, because you're at 40. The orange is what it cost you to wait. That's your real term cost. Are you seeing that there? Now, if you're thinking, Kwesi, 40 is in my rearview mirror, you just need a different plan. That's all right. This slide is not really for you, but it's for you to talk to the people that are younger in your life and point them in this direction. Can you see why we ought to start taking this seriously today? Or later today. But definitely today. Am I making sense? Am I coming through to you guys? All right. So I want to encourage you to do this. Next slide, please. I want to encourage you to get a plan. Now, the slide says free financial plan. Yes, I will do a free financial plan. We will do a free financial plan to Genesis. You do not have to come to see me, though. If you want to pay somebody else to put together a financial plan, pay somebody else to put together a financial plan. If you don't like free, that's okay. I don't mind. My point is, it doesn't have to be through me. You should have one. Full stop. Have one. Has anybody ever succeeded by accident in the history of anything? No, they usually have a plan. Now, they might fail a lot on the way along there, but they had a plan of action. Because success doesn't happen accidentally. Success is on purpose, and it takes work. If you want to have a good retirement, you have to start planning. And the earlier you start planning, the better your chances are. All right, next one. So aside from the free ebook, we do have, I can point you in the direction of other resources. Like on our website, we have a time management sheet, we have a budget planner, and we have what we call a fat find. A fat find is not a typo. It is, and it's not a dieting thing. It's just that we believe that most people have fat in their budget. I once sat down with a family to say, hey, where does your money go? And I was a bit, I had spoken to their pastor first, so I was a bit tough with them, and they pulled out their bank statement. And you know what they found? 7 days a week, there was an entry on their bank statement where money was leaving their account and going to Tesco. I said, are you guys funding Tesco now? Is that what's going on? Well, you're in Tesco every day of the week? Seriously, I'm not kidding. 7 days a week, money was leaving them to go to Tesco. I said, do you really need that much? They said, I don't even know how that happens. How does that happen? Guys, if you're not paying attention, your money will get up and walk away to the person who is paying attention. You better believe me when I tell you that every Tesco store is designed in a way to make you spend the most money and make you spend the most time. Seriously. Everything you want is right at the center of the store on purpose. Look it up. This is designed to take, listen, don't even use their Wi-Fi. I'm telling you, if you use their Wi-Fi and you're checking up stuff, they know exactly where you are in the store, and they've got people who are analyzing that to make your experience more pleasurable and make their cash registers ring a little bit more. I've heard somebody say, just stay on the outside. That's where they keep the fruit and veg, right? Just stay on the outside. Stay on the outside of the store. The minute you go in, you're in danger territory. I would tell you, don't even go into a supermarket without a list. Right? You hear what I'm saying. Do not be afraid to walk to the supermarket with a calculator. I don't care how much money you have. It's not for them. All right? Your money is not for them. It's for your family. Is that making sense? All right. Okay. I'm going to wrap this up because I'm sure I am done now. I am sure. No, I got more. Listen, just at the top of it, it is a button called Go. Right in the top right-hand corner, just click Go for me. Thank you. All right, guys. This is me at the end. I'm done for time, right? How do what? Okay. Here what? Click back for me, team. Click back for me. I want to talk about how to make your money grow. No, you know what? No. I'm not. I'll just free talk with you. So You want to remember what we said about the rule of 72. You want to find a way to get your money to move forward. But here's something. Everybody that I have met likes investing. As a concept, you say investing is kind of sexy, right? Everybody's attracted to investing. We all want to invest. But can I tell you something? Investing is a long-term goal. Let's call that 5 years and beyond. Before you go dealing with 5 years and beyond, make sure you got the next 3 months covered. We don't know what's going to happen in 3 months. See, one of the biggest challenges is that if we do not have an emergency fund, something to cover 3 to 6 months, when we have an emergency, we end up going to Visa and MasterCard. And that becomes our emergency fund. But I've already showed you the rule of 72. That's a really poor strategy because they will take more money than you want to give them. So if you want to start thinking about investing, first put a strategy in place to create an emergency fund that covers you for right now. Right? Money you put away for the future is a good idea. You want to be doing that. Now, I would say inside of the book here, let me see. There's a strategy. Actually, you know what? I'll just tell you, write this down for me. Write this down for me. Oh, somebody just registered. I just saw a name pop up there. That'll take you to my calendar, by the way. This link just take you straight to my calendar, and you can book in for a financial plan. Please feel free to use that while I talk to you. 10, 10, 10, 70. That is a great strategy for you to use. 10, 10, 10, 70. This is something that I was taught early on, and it conforms to a principle that wealthy people use. You know what that principle is? Pay yourself first. Pay you first. So the first 10, I don't even need to explain to you guys where that goes. That's your tithe. That's your first 10. Your second 10, and this is easy, because it's easy in a church to explain this, right? If I wasn't speaking in a church, I'd say charity, because there's a principle about giving, right? But I'll tell you guys, your first 10 is your tithe. Put that where you get fed, because that's supposed to help your community. The second 10 is your short term. Now, your short term is initially your emergency fund, but after you got your 3 months sorted, your short term becomes your 1 year goal or your 2 year goal, right? The next holiday you take, or the clothes you buy, or something like that. Put it on, that's your second 10. Your third 10 is your long-term goals. So this would be the money that's going towards investing, the money that's going towards future things, like maybe kids' education or deposit for a property further down the line, right? 70 is everything else. Everything else. You see, what happens is most of us, when we get paid, the tax man takes his bit first, and the student loan people, they take their bit as well. And then we go and we pay the rent, and we pay the council tax, and we pay the electricity and the gas, and then we buy the food, and then we get to the end, we pay our bills. We pay our bills, our credit cards and loans. And then we get to the end, we're like, I don't have any money left to save. Does that sound familiar? Do it the other way around. And you say, but Kwesi, how do I live in 70%? Walk around the grocery store with a calculator. Walk around the grocery store with a calculator. Go in with a list. I really, really can't live within 70%. Okay, well then do 10, 5, 5, 80. If you cannot save £1, you will never save 10. If you can't save £10, you will never save 100. Some of you thinking, when I make money, I'm going to save £500 in one go. Not if you don't save £1 now. It's a habit. It's a habit. And I would start, seriously, 10, 10, 10, 70. Write it all down. Don't go in. I remember when my wife and I did this, and we walked around Sainsbury's with a calculator, and she was checking it all up, and darn, it went over. Put that one back. Keep going. We became experts. Absolute experts. Eat out? No. You know how much food I can make in my house with that thing there? No, and I make it taste how I want it to taste. Now, I once spoke to a lady early on, and she helped me with this concept. She said, when I was younger, Kwesi, She said, first of all, I love what you're saying, but I don't need anything. I said, how is this possible? What weird person is this I'm spoken to? She said, when I was younger, I used to save all my money. And my friends all said to me, Beverly, you don't have any fun. Beverly, you need to live a little. Beverly, you need to come out with us. They say, you know what they say to me now? I said, what? They said, Beverly, can we borrow some money? I said, you're playing a long game. This isn't for having fun, right? Are you interested in having a legacy? Are you interested in doing something so that long after you gone, people talking about you? Have you guys ever watched Sesame Street? Yeah, Sesame Street, anybody? I grew up on Sesame Street. That's one of the things that my mom allowed us to watch because TV was rationed, so we had Sesame Street. You know what I discovered recently? Sesame Street was, the money that went into developing Sesame Street came from a foundation. That foundation was set up by a guy called Andrew Carnegie. He was a Scottish guy who went over to the US and revolutionized the steel industry. Before taxes existed, he was one of the richest men in the world. Now, some of you may have heard Napoleon Hill. Napoleon Hill got his start from Andrew Carnegie, who gave him an interview and then introduced him to everybody. In my book club that we're running with the team, we're going through that interview. That interview happened in 1908. Yeah, that's a long time ago. That guy funded Sesame Street. Now, Andrew Carnegie built all the Carnegie libraries. So you might know about the Carnegie Hall or a Carnegie Library. Pretty much every town up in Scotland has a Carnegie Library. We all know who this guy is. And he existed over 100 years ago. In 100 years' time, will anybody be talking about you? Now, that is a serious question that is worth thinking about, and it's about what we do today with a view for then. And this money conversation is not just about how we pay the bills at the end of the month. It is, but it isn't. It's way more than that. It's about the impact that we create and what we do moving forward. Now, maybe the only people that remember you is your family. But maybe they have such a vivid memory because, a lot of my colleagues say they're going to put my face up on the mantelpiece and they're going to say, this is who turned our family's finances around. This is why we are able to live here, here, and here. This is why we're able to do this and we're able to have businesses there and we're able to have impact in this town and in this city. Is that making sense? But it has to start with a decision by somebody. Are you guys following me? I really feel like I've spoken too much. I'm enjoying this. Don't get me wrong. You guys are the best crowd I've spoken to all day. Truth, all day. All right? But I feel like I should. Anything else? Should I take some questions? Oh, here's the thing. I never really told you about where you can invest. I would rather not have that conversation out wide because, one, I am not an investment advisor. I'm not. I can point you in the right direction. I can signpost you. I can tell you how to do that. But what I can do is I can sort of do a review of the finances to sort of help you get set up for that. Some people want to invest, but what they really need is a plan to stabilize some things before they go in to invest, right? Or maybe just a plan so that they can invest while they're doing the other thing. It's not a no, but there's an order to these things. Just like building IKEA furniture, there is an order. It might take a little bit more time. Just devote to the process. Yeah? How am I doing? Wait, what do you want me to do? Should I come down? Should I stay up? I can go either way. Questions? Let's do that. Somebody able to pass a mic around so that I can hear people? I'm okay to take some questions. Now, the answer might legit be, I don't know, or it might require a little bit more conversation, right? And just bear with me for that. So, there we go. But yeah, let's do that.
Hi, you mentioned your ebook. How do we get hold of your ebook?
Oh, that's the easy part. You either book in to see me, and I'll make sure you get it, or I don't want to hold you hostage to a meeting. You can tell I can talk. This meeting's only an hour. If you wanted to get the ebook, drop me a text with your name and your email address, right? Ideally, we meet, but if you just drop me a text with your name and your email address.
Hi, thank you so much. So we book a one-to-one with you.
Yes.
Then what's the next stage? How long does it take for the plan to be developed as well?
That meeting's going to take about an hour. I want to go through a little bit more than I went through today. And then we're going to do a fact find. I like to keep things within an hour because time, right? We can meet within the next few days after that, or I really don't want to wait more than a week. The amount of things that can happen in a single week, ideally I would see you within 2-3 days after that. I didn't hear that last
Developing of the plan, how long does that take?
Say what?
Developing of the plan,
Putting together the plan.
Yeah.
Really, within a few days after our first meeting, we're going to have that. You guys will be able to have access to your plan to just log in online and then interact with it afterwards. We meet, we go through it, and then you'll be able to go back online and interact with it. Anybody else? There's a question in the back there, it seems. Or at least, or they were waving. I don't know.
If you save money from like 15, will it be?
It would be way better. No, seriously, it would be way better. Like, you got no idea.
Will it be still valuable like 30 years later?
Sorry, say what?
Will it still be valuable like 30 years later?
Yes.
Oh, thank you.
Yes. Let me explain. Okay, so there's saving. I want to separate two words. We got saving over here, and we're going to put on this side, we're going to put investing. Okay? Saving is saving. The rate of return is not really going to be very high. It's putting money away. It's not growing like 10, 12% because that requires time. Saving is just having your money away. Maybe it's putting it into a savings account, which is at 1%. The reason it is okay for short term and not okay for long term is because in the short term, the value of your money isn't going to change as drastically. Now, I'm saying that in a time when inflation is 10%. And for those of you who aren't quite sure what that means that your money is losing value. Your money is 10% less valuable than it was last year, right? And we can see this. Have you guys driven past a petrol station recently? Those are scary numbers. I remember when the lorry drivers went on strike, it wasn't even £1. But now it's 160, 180, right? So the value of the money is gone. Money cannot buy as much as it could 10 years ago, right? We all follow that. Now, if you start putting money away at 15, I would say speak to your parents about a junior ISA, one that they can invest it for you. I don't know if you can open an investment account at 15, but you can definitely get the money put into it where it starts to grow at a higher rate of return because you're not going to touch it for at least a decade, maybe even more. Does that make sense? So, yes, it will work. Yes, it can work. Now, I got to say this about investing. It does this, right? Right? You understand? It goes up, it goes down, it goes up, it goes down. That's the only constant that is going up and is going down. But the truth is that over a period of time, a long enough period of time, and I believe the study was 5 years, in a 5-year period, it was generally up. It generally went up. Now, here's one way to think about it, and this is a way that people who are dealing with investing, they consider this. You know when the market crashes? Actually, no, let me ask you this. I'm going to ask you, in the pink jacket here, I'm just pulling you because there's a color, right? Okay, so you are into antique furniture, and you bought a beautiful table on the antique market, and you paid £10,000 for the table. But the very next week, the market's crashed by 50%. What's the value of your table? You say 5,000? Anybody agree? What would the value of the table be? The market, she paid 10 grand for it, antique table, market just crashed by 50%. What's the value of her table? 5,000. All right? That's not correct. It's still 10,000. It's 5,000 if you want to sell. But what if you thought, oh, hello, the antique table market is on sale. I'll go buy 2 more. I spend another 10 grand and I get 2 now. All right, so now she has 3 tables. Let's say the market crashes again. And she says, this sale is just getting better. And she buys a few more tables. And then what happens eventually? The market rises, right? So what's the value of the tables now? Again, nothing until she decides to sell it. This is the mindset for investing. That process is a very simplified way of explaining something called pound cost averaging. It is in the ebook. And it basically says that if you are thinking long term, the dips is when it goes on sale. When it rises, again, you can choose to sell it. But the worst thing you can do is buy it up here and sell it down here, because then you just lost money. You might as well just give that away. Do you see what's going on here? So to the 15-year-old talking about investing, there will be a lot of that. But on a long enough curve, typically things can work out. But again, you're going to want to speak to an investment advisor, because that's not me and I don't want to get myself in trouble. All right. Any other question? Any other question? We got a question over there. The right-hand side of the room knows everything. They don't have any questions.
I'm not sure if this is your expertise or not, but if
Probably
you,
isn't. I'm just kidding. Okay.
if you've moved from like different companies and you happen to have your pension sort of in different places, just knowing whether to combine them or keep them into different places. I keep seeing this pension B thing, which is talking about like combining all the different ones together.
Yeah, that app
But
is
I
popping up
just-
everywhere. I see that app like 3 times a day. I'm like, it just pops up as an advert. I'm like, okay, you're spam now. I don't know what you do, but I'm going to class you as spam. All right, so the question is about pensions in multiple places. Is it, what do you do? Okay, you were right. It is not my field. However, I was having this conversation with the investment guy yesterday, and I know somebody who can help you with that. Now, the company that we partnered with, because the way Genistar operates is that we focus on the education, and then what we do is we build relationships to address the other questions. So there's nobody that Genistar works for. As a matter of fact, it's probably safe to say they work for us, in that we see what our clients need, and then we go and source a relationship to meet that need. Now, each of these processes are pretty rigorous, because we want to make sure that everybody is regulated to the standard that they should be regulated, and that they are able to provide a service, because for us, the most important thing is you, right? We build a relationship. You know, I am involved with my clients. I know their kids. I know their birthdays. All right? This isn't merely transactional. We build a relationship. By the way, you guys realize that we're family now, right? I'm on the stage. I stopped being a guest about 2 hours ago. No, seriously. You think I'm kidding? I stopped being a guest 2 hours ago. I expect dinner invitations. Not today. Not today. All right. But the relationships we build are for you. And the investment company we were speaking to just yesterday talks about having a transparency. So yes, pensions all over the place. The amount of times I've met people and they're like, I have something, I'm not really entirely sure what it is. You can transfer those in, but I would say speak to them, see about how it will work transferring it in, but then after that you would have transparency, everything would be in one place, and you'd be able to have a little bit more oversight and management on that. Book in, we can have that conversation. Anybody else? I am looking to the right side of the room, but you have nobody. I must have just been so clear to you guys. It's just these guys that didn't quite get it. Oh, we do have a question. All right. See, did I badger you for a question? I started to feel a little bad that I badgered a question out of you.
I heard a question that was asked earlier on. I don't know if you caught it or not.
Okay.
Someone asked, how can you pay your mortgage early?
Oh, I didn't hear that question. I love that question. First of all, you got to understand that if you're going to do that, you're going to make some enemies with people in the banking system, because they like your mortgage. As a matter of fact, and I don't actually know if this is true. I like to look up the etymology of words, as in the meanings and where it came from. This one seems plausible, but I'm not sure if it's true. And the person said that the word mortgage is from the French, which is death grip, right? Yeah, mortgage, which means that they got you in a death grip. Sounds like WWE wrestling, but you want to get out of that as quickly as possible. So, again, that is something that you need a plan for because it's not an overnight solution, right? It is not overnight. You should have a plan in place for it. And we teach something called fortnightly repayment. And that's just a simple process. Your mortgage is due on, say, the first of the month. Let's say, for ease of mathematics, your mortgage is £1,000. So on the first of the month, you pay £1,000. 14 days later, on the 14th or the 15th, however you want to count it, you pay £500. You pay half of the mortgage. And then 14 days later, on the 28th, you pay another £500. So now when you get to the first, you've already paid that 100, right? So you've already paid the 1,000. So you've already paid for the last month. You don't have to pay them on the first. 14 days after the 28th, so now we're getting to about the 12th of the next month, you pay 500, and then 14 days after that, you pay another 500. So you see what we've done? We've just gotten rid of the first of the month. We're making half every 14 days. Now, if you did that, in a year, you will make 13 payments. 1-3, not 12, 13. Because once every fortnight. What will that do? Well, the interest on your mortgage, assuming it's a repayment mortgage, is calculated on a daily basis. So making an increased frequency, even though it's a lesser payment, wears away at the capital a lot faster. Now, there's some things to be aware of. And the reason we started with 1,000 and then did half payments throughout is you have to stay ahead of them. Because the minute you fall behind, well, now you've just broken the agreement you got with them, right? Which is to pay X amount by a certain date. And they got a relationship and they got a stake in your house. Now, in order to do this successfully, you have to have a conversation with your bank beforehand. And in most cases, they will fight you on it. Oh, no, we don't do that. It's not allowed. Now, the truth is, that's not in your terms. Unless it specifically says in your terms that you must pay once a month on this day and you're not allowed to split your payments, you should be able to do that, but expect to fight it. Because they got a really comfortable setup. You see, the minute you go and you do a fortnightly repayment, you will see the interest going down quickly, and you'll find that your mortgage is going to finish somewhere between 2 to 5 years early. You're going to save a whole bunch of interest on that mortgage. Sorry, they're going to lose a whole bunch of interest on that mortgage. So they're not really invested in that idea. And they will attempt to talk you out of it. Now, your strategies for dealing with that are going to be different. Every one of my clients who's done this, they held their ground. And then they got it swapped over. And then they came back and said, Kwesi, I didn't really think it was going to work, but my goodness, it's moving a lot faster. It's moving a lot faster. That is one way. Or consistently overpaying every month. Now, the bank said that you have, I think it's about 10%. You can overpay by 10% a year. Every mortgage says that. You know why it says that? Because nobody overpays by 10%. You look at it and say 10% is so much. But what happens if you just overpay by £100 a month? What would that do? You think, well, that can't do anything. Meet me for a financial plan and I'll show you exactly how much £100 a month will cut down your mortgage. Just an extra £100 a month. Because it will work. And I have a feeling that one of the reasons why they say you can overpay by 10% a year is because everybody's going to look at it and say 10% is a lot. I don't have that money. You didn't have to be 10. It's up to 10. You can overpay by less than that. So there are a lot of strategies, but they do require a strategy. It does require a strategy. It is not an overnight thing. And this is part of the problem, I think. We have adopted a sort of a microwave attitude to things. We expect it to happen quickly. And we don't think we're impatient, but we do expect results after action. As a great exercise, go and buy one of those plant pot kits and put a seed in the ground and then wait to see how long the action turns into a result. Because it will, but it takes time. I always tell this story and embarrass my wife, but I remember we bought these potted chili plants and we put it in and put the seed in, and we were there every day, put a little bit of water in it, and she's like, this is a while ago, by the way, so she's learned this lesson. I know she's watching. She's learned this lesson. This is not a new thing. This is an old story. And she's like, I don't think it's working. Do you think the seeds died in the ground? Should we dig it up and start again? And I'm like, no, hang on. Okay, we wait a few more days. Still nothing. Should we start again? No, hang on. Now, I grew up in Trinidad, right? I grew up with planting and grassing, all that sort of stuff. So, hang on. Now, we pass a week, and she's asking me all the time. I'm starting to doubt, but I keep myself quiet, right? I'm saying, hang on. And then there's this little green thing that comes out. And then it keeps coming out a little bit more. And then eventually you got this plant, and then chilies are coming off the plant. And I'm saying, you wanted to dig it up, right? You wanted to dig it up and start again. You have to wait. You've got to put in the work and keep putting in the work and keep putting in the work and keep putting in the work. You see, interestingly, this ties into the verse that Pastor had up on the screen when it said, let patience have its perfect work. What happens if you don't let it have its perfect work? You don't get mature. You are not lacking nothing. When you put a plan in place to deal with money, understand that one of the ingredients is time. That's how you deal with it. It's going to take time. There was a question over here, I think. Somebody had a hand up. The lady in the mustard. There we go.
I wasn't the original person who had my hand up, but I do have a question. So obviously we've spoken about mortgages today and how to pay off your mortgage. I think when you asked the question, who wants a mortgage, not a lot of people did put their hands up. What are the other alternative ways to acquiring your own home without going through the avenue of getting a mortgage?
Inherit? No, okay, I'm kidding. How do you own your own home without getting a mortgage? You either have to have all that money outright or use the mortgage as a tool. There's nothing wrong with a tool. It's not like, there's no unholy tools, right? It's not like a hammer is holy, but a screwdriver is unholy, right? It's a financial tool. The only thing is, if you try to use a hammer without knowing how to use a hammer, then you end up in A&E, right? And that's the same with all financial tools. If you try to use a financial tool without understanding how that tool works, the equivalent to A&E is an IVA or a bankruptcy, right? There are no unholy tools. It's just got to learn how to use them. So there's nothing wrong with a mortgage. I'm not dissing it, but it's not the end, right? It's like your table's wobbly. So instead of fixing the leg, you just stick a coaster under it and say, yeah, it's fixed now. No. That's a stopgap. The end is to actually fix the table, right? That's what it is. So, hey, listen, if you aspire to getting a mortgage, great, but you got to aspire to paying off the house. I was speaking to a lady, and she's 65. She was sharing her story. Actually, the mayor of Merton. Darn, I don't know if I should have said that. Anyway, she shared the story. I thought it was a beautiful story. She said, when she was younger, she got a mortgage, and when she got it, and she didn't even know about how mortgages work, but she knew she wanted to own her own place. And then she remortgaged and increased the size of the house, and then she remortgaged and bought houses for her kids from that. And then she cashed in a policy she had and paid off everything, and now she owns her own house, and so do her kids. She used the tools. And I was speaking with her a couple weeks ago, and she said she had such a passion that everybody could understand how these things worked, because she knew that she got where she got to because somebody helped her. And I'm telling you right now, we got to get better at this. And we got to look out for each other. And we got to get the knowledge where we can and share it to other people so that they can have it as well, because it's not just for you. Your kids are going to be hanging around with somebody else, and you want them to know what your kids know so that the entire community can grow. Am I right? All right, okay. I think we're done. Thank you very much.
Thank you so much, Kwesi. Thank you so much. God bless you.